Bank of America fined $250 million over junk fees, withholding credit card perks, and creating fake accounts. Go figure. Bank of America on Tuesday agreed to pay $250 million in fines and compensation to settle claims the bank systematically double charged customer fees, withheld promised credit card perks, and opened accounts without customer authorization. By the way, a pretty unique thing about Bank of America, depending on the credit card you got, sometimes you can't even auto pay your credit card. So think about that. That's pretty insane too. So Bank of America agreed to pay $100 million in restitution to harmed consumers and another $150 in civil penalties after the Consumer Financial Protection Bureau and Office of the Comptroller of the Currency said the bank violated a number of laws beginning in 2012. Bank of America reaped hundreds of millions of dollars by charging multiple fees to customers who did not have enough funds in their accounts from February 2018 until February 2022, the CFPB said in a statement. Consumers could not reasonably expect or understand they would be hit with $35 fees each time the bank declined to pay a single transaction, regulators said. And in a statement, Bank of America, helmed by CEO Brian Moynihan, said it voluntarily eliminated or reduced a range of fees last year. So the CFPB has launched a crackdown on a range of so-called junk fees, including overdraft and non-sufficient fund fees. It says lenders unfairly charge customers for banking services. Yeah, because so for some people who may not know, with some bank accounts, you're charged a fee if you don't have a minimum account balance within those bank accounts, right? Now, that's not for every single bank account, but for something like Bank of America, they charge you a fee if you're not storing like a certain amount of money within there, right? Now, it's also interesting. Bank of America and other banks typically did something where, like, let's say that you had like $10 in your bank of account, like your checking account, let's say that, and you went to go buy lunch from, I don't know, let's just say like McDonald's as like an example. And after taxes and everything, it actually cost $12, right? But you didn't actually no. It should actually probably be better that like you only spent $10 on the McDonald's meal, but there is a transaction coming through at the same time that you spent that $10. So technically you were at zero, but they like basically Bank of America or other banks didn't process the fees fast enough to where it would actually show accurately inside your account, right? So what I mean by this, to make it a little bit more clear, because I kind of jumbled that up. Let's say that you are buying a $10 meal and you got $10 in the bank account. So you're thinking, oh, I got $10 to be able to pay for this meal. What Bank of America and a lot of other banks did when they typically saw that low account balance and they see basically things that are like not like that there are charges pending from previous days, right? Because sometimes they will like take a long time to process these charges. They'll like hold on to it sometimes. Now, I'm not necessarily saying that Bank of America did this, but I'm saying like as an example where they would hold on to doing those charges so that the person's bank account will actually reach zero, and then they hit them with the charge, like to process the charge, and be like, oh, you didn't have enough money in your account, so we now got to charge you an overdraft fee, which is bad for a lot of people because a lot of people, sadly, just do not have money in their account. Now, to me, that sounds kind of crazy because, as me personally, I like having money in the account. I like being debt free. I like putting money towards investments. I like being very financially safe, secure, right? Like it seems crazy to me to not have money in the account. But I have talked to quite a few people where they have overdrafted quite a few times, and it's actually like very, very often. And it's pretty sad because you see some people who are potentially making good money or they're working pretty hard, but because of how they are managing their money, and they're like getting into this kind of weird, like really weird cycle of like spending money, not having enough money, getting hit with overdraft fees, so they're getting hit with fees that they can't even afford, so they end up basically cycling this like super bad roundabout thing. Like they just constantly basically always run out of money because they always get charged fees when they don't got money, so they got to pay more money to basically cover those fees. So basically you're like, it's very similar to people who carry a big credit card balance. You are basically having to work or trade your future hours, right? Your future life to pay for things in the past, which is pretty insane when you really think about it, right? That's why I really don't like people using credit cards or going into debt because you're basically trading your future for what you bought a week ago, a month ago, a year ago, decades ago, right? Like, can you imagine like having to like work in your 40s to pay for something that you bought in your 20s, which is basically student loan debt? But some people have that situation with credit cards. So that's basically what was going on in this situation. So under sales pressure or seeking rewards, Bank of America employees illegally applied for and enrolled consumers without their knowledge in credit card accounts from at least 2012, the CFPB said. That's disgusting. The accounts represented a small percentage of new accounts at the bank, regulators said. The bank, based in Charlotte, North Carolina, also failed to make good on cash rewards and bonus points promised to tens of thousands of credit card customers, according to the CFPB. In addition to paying penalties of $90 million to the CFPB and $60 million to the OCC, the bank agreed to update regulators on its compliance progress in a year. We voluntarily reduced overdraft fees and eliminated all non-sufficient fund fees in the first half of 2022. As a result of these industry-leading changes, revenue from these fees has dropped more than 90%, Bank of America said in a statement. Separately, Bank of America's financial advisory arm, Merrill Lynch, Pierce, Finner, and Smith agreed to pay $12 million in penalties to the Securities and Exchange Commission and Financial Industry Regulatory Authority for failing to file hundreds of suspicious activity reports to regulators from January 2009 to November 2019. And Merrill discovered the issue in 2019 and later told regulators, according to the SEC's order. Crazy. To me, this is just like sad, but also it's not really that surprising. Like the problem with like a lot of these like massive banks and like major financial institutions, they have the money to pay for the fees for when they get caught. Plain and simple, which is a super sad thing. If you want to learn how to get out of debt, mess your money, go to 40inbox.com. Stay tuned for more. It's just a sad situation because the American people are just constantly getting screwed by these massive corporations.